Hello everyone, I hope you're all having a great day today. So today I just wanted to take a look at why has SCHD stock become so popular over the past year. You see all these types of videos, SCHD, retire with SCHD, once in a lifetime opportunity, SCHD, 50,000 in SCHD will beat your full-time job. All these types of videos that are very, very pro SCHD. And don't get me wrong, I think SCHD is a great ETF. It has great growth. Just ignore this drop. That's the stock split that happened today, actually. But it's had great growth. Their holdings are good, solid holdings. Home Depot, Verizon, Cisco, BlackRock, Texas Instruments, Pfizer, Chevron, Bristol-Myers, Squibb, Lockheed Martin, Coca-Cola Company. They have good diversity in sectors of financial services, healthcare, consumer defensive, energy, industrials, consumer cyclical, technology, communication, basic materials, utilities, and they actually don't have any real estate. But the growth of the stock, of the dividend of the stock has been fantastic as well. It's grown just insane amounts year to year. It's had great growth from the previous year, 0.66 in June to 0.82 in June. So 66 cents to 82 cents. That's really good. What a lot of these YouTube videos are trying to tell you, though, is that they're showing these drip calculators that say, yes, you're distributing quarterly for SCHD. It's a quarterly dividend stock. Drip, yes, you want to reinvest your dividends. Let's say you start with 0 shares. You have an annual contribution of $500 a month or $6,000 yearly. And let's say the annual dividend yield is 3.37%, which is what it is right now, or close to it at least. Let's say a lot of these YouTubers and finance guys are trying to say, oh, it's growing 10% or more each year for the annual dividend. It's growing 10% or more. And the actual share price of the ETF itself is also growing 12% or more each year. And they're trying to show this. And for 30 years, your ending balance is over $2 million. Your return is 1,000% average annual return. And your total annual dividend income is $43,000 and $300,000 per year. Payouts over the last 30 years, dividend payouts that are reinvested, and 22% yield on cost, which is very, very high. So now something more realistic that I think would be more realistic is keeping it at a 3% increase and a 3% share price. And that gives you an 8% yield on cost, which is still a decent amount, but it's going to turn your end balance from over 2 million to 466,000, total return to 160, average annual return 3%, and annual dividend income 15,900 or almost $16,000. Now, this is more realistic because they're not growth stocks in this dividend yield ETF. They're mostly value stocks, so the growth that it's had doesn't seem to be sustainable. Like this guy says on Reddit, do you guys think SCHD can maintain at least 8% dividend growth for the next 30 years? And first, no, I don't think 8% is sustainable over the long term. You need to think a little bit harder about how dividend growth works. If AVGO yields 1.6% and increases their dividend by 10%, the portion of the fund that is invested in AVGO goes from 1.6 to 1.76. If FCHD replaces AVGO with a company that yields 3.2%, the portion of the fund that previously was yielding 1.6% is now yielding 3.2%. So the equivalent of AVGO doing a 100% dividend increase. So even though the new company might have slower growth, dividend growth than AVGO, SCHD may generate strong dividend growth by making the swap. So basically they're saying if the stocks within the ETF are changed, that's how SCHD could possibly maintain its dividend growth, but it's unlikely that this dividend yield could be maintained over the next 30 years. The yield of 3.37%. That's sustainable, of course, but not growing 10% of that 3.37% every year. Now, don't get me wrong, I'm not a very smart or savvy investor guy. I'm just posting this video just to share my opinion, just to share what I sort of think and how I'm thinking that it's not going to be all rainbows when you're investing in SCHD. You're not going to retire with like $2 to $4 million after 30 years. It doesn't seem sustainable. Is it a good investment? Yes, I think it is. But is it sustainable? Are you going to get over $2 million after 30 years? I don't really think so. So I hope you found this video interesting. Please leave a like or dislike if you didn't like it. If you thought I was dumb, that's cool too. If you have any comments, go ahead and leave them below. And thank you for watching.